three massive XRP price models, including over $122,000 for the first one, $18,000 for the second one, and just about $5,000 for the third one. Yet the big question still stands as to which price model is the one that is most correct and that we can actually see for the future of XRP. And so in today's video, we are going to be analyzing all three of the pricing models and then giving you guys the one that is best fit for XRP and that is most likely for the situation that XRP currently is in. But before we jump right into that, I want to remind you guys to smash the like button, you subscribe to the channel with your post notifications as we're getting really close to 13,000 subscribers, and you share this video to your friends and family, letting them know that the pricing model that is going to be shown at the end of the video is the one that is going to be the most probable outcome for XRP. This is going to be one content-packed video, guys, so watch until the end. And that being said, let's get right into today's video. Starting off with the most recent model, the Athi and Michnick model, which states that there are 4 various cycles of a flywheel. The first one being the XRP adoption increase phase, which means that XRP is going to get massively adopted for payment transactions and the asset price is going to increase as a result. The price increase is going to also drive up the demand to store value, reducing the available supply for transactions, meaning when there is an increase in demand, there's a shrink of supply, meaning you're going to have to pay more per coin or, per whatever item you're buying because there's less of it. That's going to cause new use cases to emerge like the Jevons paradox, driving vertical and horizontal adoption growth. And then that phase is going to go ahead and continue into the fourth phase. And in that phase, since you're going to have an increasing adoption and store of value demand, this is going to lead to an exponential price increase or price growth for XRP the coin as well. Now, there are some side notes right here, like competing forces of transaction utility and the store of value, and the discount rates applied to calibrate the future value of money to the present day. So of course, just a bit of information on the numbers that are going to be provided for this calculation. Now, in this calculation, the model assumes that 10% of the global transactions moved by the XRP ledger by 2030. So basically, 10% of global transactions has to be going through the XRP ledger by 2030. It also states that 10% of the global assets also have to be moved by the XRP ledger by 2030. The XRP escrow, is not considered in the available for store value. And another assumption, and that's the last one, is that the discount rate applies even in assets backed by the currency economy. So just some things that you have to know. And of course, it does tell you some drawbacks here, like it doesn't account for the impact of supply shock and recovery on the price. It does not address how CBDC adoption would impact the actual transaction volume. Now, these are two main things because they are crucial. It's not like we're just going to see a vertical spike and it's going to keep going vertical. No, we're going to see a vertical spike and then there's going to be a downtrend because people are going to be selling. And lastly, it says that it's not able to account for new use cases that emerge after the adoption. So it makes a lot of sense. These are possible drawbacks right here. Now we get really into the XRP value calculation, and then we'll go into the the quantitative theory of the money, but for now let's stick to the XRP value calculation. The daily transaction volume in this, or the value, is 700 billion. The time between transactions is 1 second, which is actually quite reasonable and makes a lot of sense. The store of value demand, which means this has to be in store, it has to be untouched, under any circumstance, can't be moved, is 530 trillion, kind of like the escrow where it's on hold. The discount rate is 10%, the XRP circulating supply is 56.5 billion, and the time until steady state is 7 years. So again, the latest here is we're talking 2030. The year 2030 XRP is going to be $4,813. Now, it does give you a quantitative theory of the money right here, which states that the approach based on the incorporation of 2 primary functions of money, being the medium of exchange, the first one, and the second one is store of value. Now, again, really at this point, we are looking at the factual information, the factual numbers, and I think that what we went through right now is the most important part because it does tell you all of this information without you having to read any of the quantitative analysis. The numbers are enough. Now, of course, this is the first model or the most recent price per XRP model. Now it's time to jump into the second price per XRP model, which is, significantly higher. We are now going from $4,000 to $18,000 per XRP. Now, real quick, before we jump into it, make sure you guys do check out MetalCryptocom because they're actually offering 10% off their Ripple XRP coin with case. I have a ton of those, to be honest. They are so freaking nice and look absolutely fantastic. And they also have the XRP coin with case, which actually comes in gold and silver. Also looks very, very nice. And they have a ton of other crypto coins like USDT, Stellar XLM, Shiba Inu, Dogecoin, Bitcoin, Cardano, Ethereum, SafeMoon, Litecoin, and just a ton of other ones. Now make sure you guys do check them out. That being said, let's go back into the pricing model. And just again, quick thing here, you're going to get 10% off if you do go ahead and use my referral code down in the description. Get yourself a Ripple XRP coin you don't want to miss out, and let's get right into the video. Now this model is labeled as the discounted cash flow model, meaning that this rate here, the transaction volume versus the discounted value, is going to be significantly different. As you guys can see, when we look at the XRP transaction volume, it's 127 trillion, while the discounted cash value is actually only 31 trillion. So only 10% is part of the discounted cash value. Now our terminal values, in this case, we're saying that the actual terminal value of cash flow is going to be 1616 trillion. And then the discounted terminal value of cash flow is going to be 654 trillion. Now, let's ignore that chart right here. Let's jump into the description cash flow model, which is basically the adapted to access impact on global transactions over the years and discounting the value to current years. Now, the measuring for this is going to be measuring the present value of money for the future. So basically, we are saying the futuristic price prediction of XRP, and the model is going to have 4 assumptions. First one being that XRP only used for transactions, not as a store of value, not like the previous model. In this model, the discount rate is consistent year over year, and the XRP adoption starts at 2%, growing exponentially to 15%, and then it slows down until 70%, and then of course it once again accelerates to 100%. So this is something that, again, we have to understand because it is basically assumptions. This is what they're running their model on. Basically that there's going to be some exponential growth, and then at a certain point in time it's going to slow down, and then after 70% it's going to go back and accelerate. Now the economic growth rate based on the Federal Reserve is going to be set at 2% for this model right here. 2% is the inflation rate. Now of course the model drawbacks for this is the specific discount rate subject to industry debate because we don't really know what the discount rate is. It does not account for the store of value impact on the circulating supply, and assumptions around variable adoption rates are difficult to really validate, so we're just running based on standard numbers that we kind of provided through estimates. None of these models are mine, by the way. These are all from Twitter, I think by Clever Hummingbird is her name. But once again, let's go into the discounted XRP valuation for the price. Now, in this specific prediction or in this specific model, we talk about the base global transaction volume being just about 105 trillion, in this case 104 trillion. Analyzing the economic growth rate as we have assumed is going to be 10%. The applied discount rate, like we stated before, is also going to be around 10%. And the years until fulfilled adoption is going to be 10 years, meaning that 10 years from this price model is where we're going to see the price per XRP being through this model $18,036. The total transaction present value has to be 915 trillion. That is really the only way that we can even, use this price model. But of course, when we look at the XRP circulating supply, in this case, we are predicting that it's going to be about 15.7 billion. And as a result, if you do the calculations, dividing the transaction volume with the XRP circulating supply, we're going to get the price per XRP to be $18,036. Now, of course, there is a discounted cash flow theory right here, which is the DCF. I'm going to go ahead and just hover over it if you want to have a quick read. But again, I do believe that these aspects of the article or of the price value really don't talk much about how they got their price. It just talks about the actual method so that you understand how they got their numbers and how this method actually works within regards to the discounted XRP valuation. Me being a junior accountant, continuing to get my bachelor's in accounting, I don't really need to because I already know how the system works. On to the third price model, which is the highest and at the first price model that really came out that shocked the XRP community, and that is the collateralization model, which means XRP's price in this model is predicted at $122,580. Huge substantial number, but let's look at the math and let's look at how they got this prediction. This is the fair market valuation. Now, when you look at any type of fair market valuation, it's different, a bit different at least, in which we are assuming a lot more in this fair market valuation because we don't actually have the numbers that we can input into the data. So in this case, guys, again, a lot of these numbers are going to be predictable, just assumption made numbers that we are going by. So in this case, as you guys can see in the model right here, it says the fair market valuation. It states that the Big Bang single day migration to tokenized monetary systems are really what the purpose is, meaning that we are looking at the entire globe basically putting the money that they have into XRP. And in this case, it is all the money, meaning the derivatives, the private wealth, real estate, debt, central bank assets, equities, silver, US federal deficiency, energy, commodities, gold, and the money supply. Now, what it does state is that it's excluding only 4 aspects of all the money, meaning when we talk about all the money, we're not mentioning these 4 as entering into XRP or going into the market cap of XRP. Those 4 being the North American Water and Power Alliance, which is equivalent to about 14 quadrillion, the BIS off-balance FX swap, which is roughly 80 trillion, the Department of Defense revenue, or, the money that goes into the Department of Defense, 95 trillion, and the US unfunded liabilities, which are roughly about 180 trillion. These are values that really exist, but aren't going to be going into the market cap and aren't going to really be considered through this market price model or through this market valuation or fair market valuation. Now, when we look at the model's assumption, because it is assuming quite a decent chunk here, we are assuming that all the world's value will be represented on the XRP ledger blockchain. Like I said, it means all the money has to be going into XRP, or at least a big chunk of the money, more than 85% has to be going into XRP. Though the next one being the risk-adjusted coverage ratio accounts for the liquidity needed in the future economy. So again, another crucial one that we are really just assuming, these are just assumptions basically, that everything, all the income is going into XRP. Only 50% of minted XRP is part of the circulating supply is the third assumption, meaning that we're cutting the supply of XRP in half. And then lastly, the balance sheet approach is a movement or a moment in time, a snapshot of the world's value. Again, kind of like what we stated, all these are assuming all the wealth is going into XRP, and we're basically splitting the XRP supply by half. Now, the model drawbacks are it does not account for competing effects of utility and stored value, unable to account for unknown values that we are unaware of, assumes reuse of XRP for transactions irrelevant, and then again, it does go through what the collateralization model here at the very bottom. But let's go into the XRP value calculations. We are looking at a total value estimate of $5.3 quadrillion. That is on the 2030 risk-adjusted ratio of 1.25 adjusted. So again, it's kind of crazy, the numbers that we are seeing right here. It says the risk-adjusted total is 6.5 quadrillion. 2030 present value is going to be, 6.2 trillion of total value. Now, when we look at this, guys, the XRP circulating supply is 50.7 billion. We're talking about 2030 XRP being $122,580. The numbers are just insanely absurd in this case, because I don't think there's going to be a point in time when we're talking about every single dollar in the entire globe is going to go into XRP. It makes no sense. And again, as the time passes, there's always going to be new technology. I don't think it's going to go through XRP for the entire universe. And specifically, this model doesn't account for a lot of things, like when we talk about countries that don't yet have the technology to integrate a blockchain-based payment system. Those countries are not going to be able to use XRP or use the RippleNet system and put in their economic, wealth into it to begin using it. So again, there's a lot of drawbacks for the system. Doesn't really, acknowledge all of that. But when we look at the 3 models, we look at the collateralization model, we look at the discounted cash flow model, and then we look at the Athi and Mich model. 3 models with very different price predictions, being almost $5,000, $4,800. The second one being $18,000, and the last one being $122,000. The one that I feel closest, and I'm going to be honest with you guys, none of these I feel fit in the right place. They just, again, all the numbers are assumptions, and when you're very highly predicting what a value is going to be, and everything is a predicted number, then it's very off when you get, a total. So it's kind of like just picking 5 random numbers, plussing them, adding them all together, and hoping that you're going to get a answer that you feel is correct on a mathematical equation that really is quite complex. But let's say if we were forced to pick one, if somebody told me you have no option, you have to pick which one makes the most sense between this model, and then the last one, I would have to say the best one is the discounted cash flow model. And this is only because I feel like it accounts for the economic growth, it accounts for the discounted, rate. When we look at, even within regards to, the price, the inflation, all that stuff is accounted for. The total transaction present value I know is quite high, but again, when we look at which one is the most correct, this is the one that just accounts for more things. And so this is why I'm going to pick the discounted cash flow model. Alright guys, that's going to be the end of the video. I hope you guys did enjoy it, or at least you just had a very entertaining time watching this video. If you guys did, make sure you smash the like button with your post notifications on. You basically subscribe to the channel because we're trying to grow in subscriber count. Making the biggest crypto community is the goal of this channel, having us all ask questions. So let me know your thoughts down below. Ask some questions down below. I'll go ahead and answer them for you. Thank you guys so much for watching, and I'll see you guys in the next Crypto Geek video.